Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Friday, January the 20th, 2017. And I have the great honor and very distinct pleasure of welcoming back, after too long of an absence, Mr. Alasdair Macleod, and he is the head of research for Gold Money, and he is also the publisher of financeandeconomics.org. Alasdair, welcome back.
It's very much my pleasure, Rory.
Well, and I certainly appreciate you taking time out. And before we started the show, you were telling me that you've been doing some globetrotting, and I really am very grateful for you to take a few minutes out to spend with us today. And I just want to jump right in. And the inauguration of Donald J. Trump is just a couple of hours away. And what does the inauguration or the presidential election cycle look like from your side of the pond? And how does it look outside looking in? What are you seeing, Alasdair?
Well, I get mixed messages. I look at it purely, if you like, as an economist, and also from the point of geopolitical strategy. The positives, to my mind, are that the détente with Russia, I think, is an immense positive. I expect that to go ahead. The negotiations with China, I think that's what they are. They're negotiations, and I think Trump has taken a negotiating position. I have, little doubt, call it hope if you like, but I think little doubt that once he goes to China and speaks to President Xi, that things will be ironed out, and a working understanding will arise from that. On the economy, I like the idea of what he wants to do, which, so far as I can see, is de-emphasizing the role of the state in the economy. That I would agree with entirely. The problem I have with it is that he intends to stimulate the economy, firstly by tax cuts. And I think always the way these things work is you get the tax cuts first, you get the cuts in public expenditure later. But I don't know that you're going to get the cuts in public expenditure, because public finances in all welfare states are under huge pressure nowadays. And the other thing, of course, is he's going to cause infrastructure spending to take place. So this will boost the economy at a time when the economy is already growing fairly well. Now, someone did say to me, well, that can't be true because of the retail industry has been rarely suffering, stores are being closing and all the rest of it. Well, that may be, but I think that's a shift of emphasis. I think the young are shopping online now rather than going to shopping malls. But putting that to one side, all the indications are that the US economy is actually in a growth phase at the moment. Now, if you're going to start stimulating the economy on top of that, the big danger is you trigger inflation. And the reason this is a particular danger at this moment in time is the Chinese have already been stockpiling the raw materials necessary for their Asia-wide investment program, One Belt, One Road, and all this sort of stuff, the two Silk Roads, and all the infrastructure development China intends to commence doing throughout Asia. So what I can see is that you've got not only China expanding very rapidly in terms of stockpiling raw materials for its current 5-year plan and the 5-year plan after that, but now we have Donald Trump, who is going to be causing the purchase of raw materials and energy on top of that. So you've got the two biggest economies of the world driving up commodity prices. The inflation effect in terms of on prices is bound to be more severe than anyone expects currently. So that, to me, is the worry. So geopolitics, very happy. I think that's brilliant. I think it's a far better alternative and far safer than Hillary.
Yes.
But I do worry about the inflation outlook.
Now, and I'm glad that you brought up the One Belt, One Road, New Silk Road, whatever you want to call it, because I was going to ask you this later in the show, but since you've touched on it, I want to go ahead and jump in. And you spoke with Craig Hemke last week, and during that conversation, you explained that China was sucking up all the commodities possible for this project. This is a gargantuan sized infrastructure project. And China has also been purchasing mines all over the world, primarily gold mines. And you explained there was an issue with their steel stockpile that China has on hand, and that they are being forced to replace either a majority or all of the stockpile. This obviously is going to have an impact on mining and the steel market itself. The new Silk Road project is underway, as you just stated. Trump also wants to get underway a massive infrastructure project here as well. How much stress do you foresee this having on, for example, the base metals and silver? What kind of stress is this going to put on these markets, and how do you see this playing out over the next year to 2 years? I mean, it seems like somebody's going to have to start digging.
Well, yes, digging all sorts of things.
Yes.
I mean, China has for a long time planned not only to expand its own economy, but also to expand the economies of the countries which it sees as its most natural partners. And that really is the whole of Asia. It's also a lot of Asia which is in the American sphere of influence, Southeast Asia, for example, Taiwan, dare I say, Japan as well. I mean, a lot of Japanese corporations have manufacturing facilities in China. I know on the surface there's a bit of sort of friction, if you like, political friction, but they actually are working very much hand in glove with the Chinese when it comes to manufacturing. And China is also looking to the West. She basically, I think, will control the whole of Asia from a commercial point of view, not the political, because she's not interested in the politics of it. But she will, I think, pretty well control the whole of Asia, along with Russia, certainly as far as the European Union. And now, of course, we've got Brexit. Now, that, I think, is probably the first step in the gradual disintegration of the Eurozone, which really means that that's going to open it up to China and Russia, I think, in terms of trade. All the way, if you like, to where I am at the moment, which is in sunny Devon in the west of England. So, I mean, they've already sent a train. There's a train, I can't remember whether it's on the way still or whether it's arrived, but they've sent a train from Beijing to London. In the past, they've sent a train. This is just the sort of start of this Silk Road thing, you know.
Yes.
They've already sent one to Madrid. And this is symbolic. I mean, it doesn't really matter. It's symbolic. But the point is, what they're showing is that the trade routes are being revived, and furthermore, they're going to be developing along these trade routes. They're going to be spending trillions and trillions of dollars equivalent throughout Asia. And for that, they do require an awful lot of raw materials. I mean, apart from anything else, I understand from people who know about these things that the electricity grid system in China, a lot of it needs replacing. So that's an immediate source of demand for copper. This, I think, is one reason why the copper price is so strong. You can see also, you mentioned the situation with iron ore, which had been stockpiled in China. And of course, it's leached with all the rain and all the rest of it, oxidized. So a lot of that is useless. And so they're going to have to stock up on some more. The rise in iron ore prices in 2016 was almost 100%. So it gives you an idea of actually what's going on. You know, we've been sort of just quietly poodling along and thinking, oh, aren't things terrible in Europe? And oh dear, and you know, what's Donald Trump going to? But you know, throughout 2016, what we have found is that quietly, industrial raw material and energy prices have been rising and rising and rising. So here we are, 2017. Now we're going to talk about expansion. But guess what? The prices of commodities have already begun to discount it. And as we actually physically demand those commodities, I think you're going to find that there is not a lot of flexibility in the in global mining, if you like, to supply that extra stock. So I really do think that commodity markets are going to see considerably higher prices. The effect obviously works through on silver. There are more and more applications for silver. Silver is an absolute steal as far as an industrialist is concerned. relative to its properties at anything like current levels. And then, of course, you've got gold. And what tends to happen over a period of time is the price of these commodities tends to be more stable priced in gold than it ever is in fiat currencies. So if you're going to, if you expect, as I do, that raw material prices going to be rising and rising and rising through 2017, then on that basis, I would have to say that in order to maintain some balance in terms of pricing, you would expect the gold price to rise as well. And that is before any shocks that may or may not happen. I mean, one big area of shock I think that is likely to happen is I can see the Italian banking system getting into serious difficulties. I can see political difficulties in Europe. I can see the future of the euro being questioned and all those things. But before you even take that into consideration, I think the price of commodities in gold I would expect to be stable, which really suggests that the price of gold will tend to rise along with those commodities priced in fiat currencies.
You mentioned that the mining sector is going to have a hard time keeping up with this, keeping up with all of this new demand. And that's really the crux of what I want to get at, because I don't see how, if you've got, like you said, the two largest economies in the world, that one is currently in the middle of developing the largest infrastructure project the world has ever seen by 11 or 12 times whatever the Marshall Plan was from reports that I've read. And now you combine that with the potential for something similar to that to happen here in the United States. We already know that the precious metals mining sector has been in decline because there's not been any new mines to come online of any of significance in quite some time. And you mentioned silver and all the new applications, and the electrical grid within China is being reworked to incorporate solar. Their plan is to have 300 million homes online under solar powered by 2020. They're well ahead of that schedule and probably going to do more than 300 million homes. India has a very similar program that is just about as large as China's. Where's all this going to come from, Alasdair? I mean, I've asked you this question on multiple occasions, but now there's a completely different scenario than in the past when I've asked you, where are you going to get, are these companies going to get the silver in order to be able to feed this monster, this beast that's being developed right now?
Well, at current prices, I would say it's going to be rather difficult. They can continue to supply a certain amount of stock at current prices, but really you're going to require higher prices to allow mines to go for lower grade ore profitably. So I can only come up with one conclusion, and that is higher prices, then you might get some supply as they mine lower grade ore. But having said that, what really the mining cycle, the way the mining cycle works is you've got quite a long period of time between discovery of ore bodies and their development. I mean, it can be 10 years. And there's nothing major really coming on for a lot of these commodities. The result is that there's going to be a real crunch in terms of prices down the line. Now, that's just from supply and demand, and that is before we talk about what happens to the purchasing power of fiat currencies, which is actually a completely separate thing. So we could actually have a rather nasty double whammy, and that is, the first thing is you see commodity prices continuing to rise further than anybody thought real, sort of sensible or expected. And then on top of that, you could well have a switch of people saying, well, we would rather hold less currency and more raw materials or more goods. And from those two ends, you could find that the purchasing power of fiat currencies could go down, measured in these commodities, really quite sharply. And I would actually expect that to happen, given the dynamics of what we know about China and also what Donald Trump appears to be wanting to do.
Which is to make a weaker dollar, take some of the power from the Fed and the dollar and shift it back to something else. So
not even that, Rory. I'm sort of thinking more in terms of what he intends to do in terms of reviving the US economy, which basically means expanding on an economy which is already growing quite nicely, and also the infrastructure development and replacement that he intends to do is going to put pressure on commodity supplies. It's as simple as that. And there isn't really, there aren't really enough supplies around. And China has really sort of more or less cornered the market because she does deals with the Russians, who she sees as her natural provider of natural resources. She's tied up virtually the whole of sub-Saharan Africa. You can't move without bumping into Chinese officials down there. Consequently, where have you got? You've got Latin America. Okay, they're doing deals with Chile and with Venezuela and all the rest of it. So they're even over there. There is some free supply around, but there is not a lot. And also, the other problem is that in various key commodities, there has not been the investment in discovering new ore bodies and the development of new mines. It's just not there. So I can see that there is going to be a problem. And also energy prices is another thing. I mean, we've seen how violently they can fluctuate. There will always be energy in one form or another. But if you look at the oil price, I mean, I wouldn't be surprised if we saw the oil price considerably higher in the next 18 months. And that, again, feeds through into price inflation. And when people see price inflation, they then, on the margins, could well turn around and say, well, we prefer currency less because prices are rising. We prefer our goods more. And if they start dumping currency for goods, then you have got the scenario for stagflation, if you like, that we had in the 1970s.
That doesn't sound good at all.
Well, we're not starting from a very good base. I mean,
no.
The problems which so few people seem to understand is that the monetary inflation that we have had this century so far has been so great that actually what it's done is it's impoverished the majority of people. It affects people's savings. It robs them of their savings. It robs ordinary people of their wealth. So we have in the West economies which have basically impoverished the majority of people. Bankers and people who've managed to speculate successfully in capital markets have done very well. Wonderful for them. But the cost on the other side is the 80 to 90% of ordinary people have basically seen their standard of living, if anything, go down. This is actually what Donald Trump has been talking about. He's absolutely right in that sense. But I think what nobody has managed to do is to understand why it has happened. It has happened basically because the currency has been debased and debased and debased. And guess what? If you've got savings, you've got money in the bank account, in your bank account, on deposit, in a savings account, whatever, that is what is being devalued, debased, and reduced to virtually nothing. This is a real problem. Now we are trying to get our economy feel healthy and all the rest of it. But where's all the wealth gone? Where is the wealth to build things? It has basically been just completely dissipated through monetary inflation. So we do have a huge problem in that sense. But within that context, the US economy has begun to pick up quite strongly. And this is evidenced by looking at bank lending, which since around about December 2015 began to pick up quite sharply. Now that tells me that the US economy is actually progressing quite well, despite the fact that the majority of the US population has been robbed of its wealth through continual monetary debasement. And what have they done? I think they've been picking it up. They've been financing the difference, if you like, in credit. So credit cards have been increasing, loans have been increasing, that sort of thing, car loans, mortgages and so on. So it's all on tick. And so when interest rates start rising, which inevitably they will as soon as prices at the retail level start rising, then they're going to have a problem. So this is, the US economy is, I think, an economy whose principal danger is overheating. It will be prices starting rising on Main Street rather than on Wall Street. And as soon as that happens, I think you've got real problems because there's not a lot the Fed can do about it. If they raise the Fed funds rate to 2.5%, in my estimation, that's enough to topple the whole financial system in the United States.
Then I say hit 2.5% a lot sooner than later. Kill this thing.
Yeah, and what's not clear to me is that I don't think the Fed has got much idea as to where that trigger point is. I mean, we've seen with successive cycles in the past that the level of interest rates required to, in the Fed's eyes, kill demand, excess demand. That level has been falling. I mean, last time the Lehman crisis was 5.5%, something like that, 5.5%, 6%. The Fed funds rate got up to, and then the whole system collapsed. Before then, if we looked at the dot-com boom, I think it was something like 7-8%. Then the whole system collapsed. The build-up of debt, because interest rates have been zero for so long, has been far greater between the last cycle peak and the upcoming cycle peak. Now, this does mean that when the Fed raises interest rates in order to slow down the economy, because it is overheating, because prices are rising and all that sort of stuff, the rise in interest rates in order to stop the economy from expanding too rapidly, if you like to put it that way, this is the way the Fed looks at it, in my estimation, is to approximately 2.5% on the Fed funds rate. Now, at that stage, things start slowing down. Now, not only do they start slowing down, but of course you get collapses in asset prices. Bond markets the bond prices go down. And guess what happens in Europe? Because all the banks are stuffed full of sovereign debt, which, according to Basel III rules, are riskless. So they can hold sovereign debt without having to take any haircuts. They're all so into sovereign debt in the Eurozone banking system. If those yields start rising, then you've got a bank problem over there because those banks are still highly geared. They have done nothing to reduce their operational gearing, their balance sheet gearing, while at the same time in America, the American banks have at least done that over the last 10 years. But in Europe, no, this is not good. So you can see that a rise in interest rates does not have to go very far before suddenly we're in the middle of a financial crisis.
Like I said, bring it on. I'm ready for this whole thing to hit the reset button and start over. And I want to kind of look at what Modi has done and get your take on that. And what we're now learning, Alasdair, is this whole cash ban, this theft that Modi instigated in India is beginning to cause very serious problems with the citizens. I read yesterday that India's economy is well over 90% cash-based, and less than 1/3 of the citizens have access to the internet, and that the 2 banknotes that were removed from circulation were the most used notes, and the people are told they must open a bank account. Less than half of the people in India have a bank account. People are literally starving to death because they have no cash and no way of getting supplies. With gold being such a huge part of their culture and their heritage, do you see gold being used as a currency on the black market? Or Alasdair, where does India go from here?
Well, so many questions. I think the first thing is let's look at what the effect on the Indian economy. Just to summarize, the 500 rupee and the 1,000 rupee notes have been withdrawn from circulation pending the introduction of new notes. The idea being that the new notes are harder to forge. Whether that's going to happen or not, I don't know. But anyway, the new notes are not generally available. The percentage of the cash in circulation that has been withdrawn in the 500 and 1,000 rupee notes is roughly 86% of all currency in circulation. Now, if you include, it is huge, it's very big. If you include the forgeries in the system, which is one of the reasons why, allegedly, why they did it, there are quite a lot of forged notes in circulation, then I would say that at least 90% of the currency in circulation has suddenly been declared no longer money, if you like. Okay, you can submit it to the bank if you've got a bank account and you go along with your ID and you're prepared to stand in the queue for 3 hours, fine. But the reality is that this is really harming the poor and the agricultural community.
Yes.
You are right. There's a very substantial number of people who don't have bank accounts. They don't have internet connections or anything like that. So the alternatives just are not there. Traditionally, what they have done is they have tended to keep their long-term savings in gold. And if they require to draw down on it, there are pawn shops all around India, and they go and pawn it in order to buy the seed corn for next year's harvest and all the rest of it. Now, what's happened is that the removal of all this of this basic currency is storing up huge problems for next year. There are enough problems now, but let's just look ahead a little bit. I think that the effect of it is that the harvest in India will fail completely because there is not enough being planted, and therefore food prices, grain prices in particular, are likely to rise very substantially, and that will tend to collapse the purchasing power of the rupee if you're lucky enough to have it. So this is a horrendous mess. Now, how it is that the IMF can come out and say that they're reducing their forecast of GDP growth in India from 7.6% to 6.6%. These guys are lunatics. They really don't understand economics. This economy is being collapsed by a very stupid policy. People are going to be starving in India, and that is not an exaggeration. The middle classes might sort of walk around and think, well, we're all right, we're paying taxes, it's time these people were brought into the tax net. But they're going to be suffering as well. They're going to really regret this. I find it hard to see how the Indian economy will not contract probably by as much as a third in dollar terms, if you like, because we're going to be looking at a falling rupee, I think, over the next year or so. If that economy collapses by 1/3, think of the effect all around Asia and all around the world in terms of economic growth, because everybody's counting on China, India, and all the rest of it continuing to grow in order to keep the flow of trade goods going and all the rest of it. I tell you, this is not good news. It really is not good news. Now, moving on to gold. At the moment, obviously, the traditional buyers of gold, who would go to goldsmiths, refiners, go to the jewelry shops and all the rest of it, they haven't got the cash to buy it. So demand obviously drops. Now, but having said that, you'll find that smuggled gold will increase. And I think there are two sort of price differentials here. If you're an official business and you actually run proper books and you're taxed, then one thing that you have got to absorb in selling gold to the public is a 10% VAT, if you like, or sales tax. Now, what's happening is that you go into the market, you buy your gold at international prices, and you can't actually recover that sales tax because 10% on the current gold price, is just a complete nonsense.
Yes.
Meanwhile, the smugglers are managing to supply gold at prices as high as $1,500 an ounce or even more, simply because this isn't being recorded. People do not want to have gold which the government knows about. They do not go and buy gold and to find that someone makes a return and tells the tax man that you've actually got your gold. So you can see that the whole market there is being distorted hugely. I would guess that the net effect at the moment is that Indian demand for gold actually has dropped quite substantially, even including smuggled gold. I think over time that will recover because people will find ways and means of getting around these regulations. And the Indians are very inventive when it comes to getting around government bureaucracy and government regulations. So I would see that recovering in time, but you would have to bear in mind that that is against a background of an Indian economy which is actually imploding. Now, this is interesting because what it means is that the current increase in the prices in the market, we bottomed out at just a bit below 11.30 in mid-December. We're now fiddling around about 1200. That has happened on the back of physical demand. So this is the interesting thing. Indian demand overall, I would guess, has dropped. People have been trying to persuade us that the Chinese have been restricting import licenses for gold. I have seen no evidence that that is the case. It may be the case, but I would rather like to see the evidence. So I don't know about Chinese demand. But the point is that the fall in demand from India has been more than made up by large buyers in the market who have gone in and cleaned out the markets of physical bullion on the price slam between November and December. And that, I think, is very interesting. And my guess is that the result of that is that it will drive prices, gold prices, considerably higher at the end of the day than they would have otherwise gone. I mean, if they hadn't, if the bullion banks hadn't pushed down the gold price as soon as it became clear that the markets were then talking after the Trump victory about, economic growth, rising bond yields, falling bond prices, strong dollar, and all the rest of it, that was the excuse to really bash the gold price in the futures market, get the price down, cover our bear positions, and then it's off to the races again. They never actually managed to cover their bear positions properly this time, and yet the price is rising. So what they have done, basically, by pushing the price down below where it would otherwise be, is they have generated huge demand for physical bullion, which has cleaned out the market. And I think the poor Indians, if I go back to them, I think they're going to find that if they want to get more gold in order to protect themselves from the depredations of the Modi government, then they're going to end up, I'm afraid, paying far higher prices, and measured in rupees, far, far higher prices. So it's a very sad situation all round for these people, I'm afraid.
It is very sad, and it's criminal. I mean, I don't know how else to say it, and I can't be kind about it. It was a criminal act on Modi's part, and what is currently happening from the reports that I'm reading is that people are starving right now. There will be more starving in the future because of this situation that he's put the citizens in. And like you said, the farmers, they're the ones that are going to suffer the most. And as the season progresses, in which I hadn't even thought about, Alasdair, as far as the ability to buy next year's seed stock and the supplies in order to lay in next year's future crop, where's it going to come from? Where is the cash that going to come from that they don't have? I mean, doesn't exist right now. And you had mentioned the middle class walking around thinking that they're all fine and well. They won't be fine and well if they don't have anything to eat, because the farmers haven't been able to put in a new crop, period. So it's just such an unbelievable situation that they've been put into. It's hard to even wrap my brain around it. But last question for you. And earlier this week, I spoke with Bill Murphy, and during that conversation, we touched on gold being part of the monetary or financial system. Otherwise, the government nor the banks would care two shakes about gold. There wouldn't be this endless manipulation and price suppression. Earlier this morning, I was listening to this fella, this Mr. James Turk. You know James, don't you?
I know James very well.
Oh, I want to read you something that he said during an interview, and then I want to get your take on it. And he said, quote, "The logic for the price rigging of precious metals from the government's point of view is if you're going to control the interest rates, you also have to control the interest rate of gold. Gold naturally reflects the interest rate, and interest rates are a measure of risk." End quote. And how can we, or is it even possible for the citizens to circumvent this government mandated policy to suppress gold and by default silver?
Well, I mean, basically, this is why Gold Money has set up its payment system. It's to give people that alternative. Um, but even then, you can't escape the tax element, unfortunately. Now, we do actually have, and I'd like your listeners to make a note of this. We do actually have an executive order petition to remove gold and silver from taxation, and for it to be treated as equally as money alongside the United States dollars. The website is mmga.org. That's if you like, money, gold. I don't know. Anyway, so it's mother golf alpha.org. Go on there. There's a petition. Sign it. You don't actually have to be an American to sign it either. We want to get 1 million names on that. It's only just started, but it's worth doing. And with a bit of luck, with a new government, I think Donald Trump is probably sympathetic to the idea of sound money. I think he's probably sympathetic to the idea of gold. He paints everything gold anyway. Let's put it that way. So this is something. If he's going to do anything, it's going to be in his first 100 days. And if he signals anything, it's going to be in his first 100 days. Because you know what these politicians are like. Once they've got their legs underneath the desk, things start happening, and suddenly they can't do anything. Look at that poor chap Obama. I mean, he's been emasculated completely for the last 5 years. So I think that the time to hit the ground with sound money is actually now. So that's something you can go and your listeners can go and sign in for. And also, if you've got Twitter, tweet it.
Okay.
Tweet it. So, I mean, the answer, yes. I mean, James is absolutely right about interest rates. I mean, the whole thing is all markets are completely rigged at the moment. At some stage, the markets will reassert themselves. Don't ask me when. They will reassert themselves. What I can see, and this is why I've taken so long, I've probably bored your listeners hugely about the inflation outlook. This is why it is so important, I think. And the inflation outlook, I think, is going to be the big upset in financial markets in 2017. So, from the point of view of using gold, I mean, with Gold Money, we have got the facility for people to use gold as money, which I think is desperately, I think it's a huge step forward, by the way.
Yes.
And I think we have got to just keep on banging on governments' doors and so on and so forth, getting them to understand that gold is actually their friend, because at some stage the fiat money system is going to fall over. And if we are not going to starve, we've got to have an alternative. This is what the Indians are going through, for goodness sake. We don't want to have the same thing happening to us. It'll happen through a different way, I would guess. But gold, I think, is the plan B for governments. And the sooner they can recognize that having a plan B is a very sensible thing to keep up your sleeve, then I think as soon as we can get them to recognize that, the better.
Well, Trump, he made a deal with a bullion dealer about 10 years ago, signed a 30-year lease with them, and their down payment was in gold, was in gold bullion. And it was several 10-ounce gold bars. And I think that the lease terms for the property were drawn up in gold. So he is understanding of gold. He knows that it's money, and at that time and since then, with his obvious comments recently about the strong dollar, at the time that he signed this lease, he said that the dollar is worthless. He said that the
Yeah.
dollar's
Well,
in a lot of trouble, and
I think what can I say? I think he does actually have some understanding of gold. How much I don't know. But I'll also say something else. Alan Greenspan has always understood gold. And guess
yes,
what? As soon as he was put in a position where he actually had to run the Fed, he had to put all that to one side and almost pretend gold didn't exist. So, but now he's come out of it. He's now talking more freely about it. I understand from my friends at the World Gold Council that they've got an interview with him, which will be published fairly shortly. I think it's worth looking out for that. That's going to be a very, very interesting interview.
that will definitely be worth watching for. And you talking about Greenspan or Trump?
No, it's Greenspan. Greenspan is, I think the next magazine that comes out of the World Gold Council, they do this, I think, quarterly now. It's got an interview with Alan Greenspan, and it's going to be a very interesting one to read.
Very cool. And the website that people need to go to that Alasdair was talking about is mmga.org. And that's to sign the petition in order to remove the taxes from gold and silver.
Yep, and to allow gold and silver to be treated equally with dollars as money.
I like it. And we've been speaking with Alasdair Macleod, and he is the head of research over at goldmoney.com. And he has his own website that he publishes, and that's financeandeconomics.org. Alasdair, I can assure you it will be a lot sooner than later that we have you back on for follow-up.
That would be my pleasure, Rory.
Well, and I certainly appreciate all your time, and I'll let you get back to your globe trotting and have a great weekend.
Thanks, and you.
All right. Thank you so much.